All right, good morning, everyone. It is 9:08 on the morning of November 11th, 2022, and this is my pre-market strategy session. The title of today's video is Bullish in a Bear Market Again, because, well, you know, in order to have down moves, you gotta have up moves. And in order to really pick your spot on the downside, it's a good idea to pick it after it's come after a big up move. So this morning, here we are. Let's see. Let me look on the 10-minute. Okay. So 283.56. Generally speaking, this price area of 283.56 has been a point of resistance here for the market since late September. So we're going on 2 months of this 283.56 number, roughly 283.56. as being a spot where markets have trailed off ever since the 21st of September. It's hit that number 1, 2, 3 times and hasn't been able to break back above it yet. So we'll see what happens today. If today we get a move, now imagine you can see we're coming out of overbought here in the pre-market before the open. So I imagine it's going to fall back down through that 283.50, that mid 280, or 283 number. That mid, I think that it's going to sell off a little bit at the open. There's going to be some profit taking, and then at some point during the day, this is just what I'm like making up. This is the scenario I'm seeing for the day. At some point during the day, it just wouldn't surprise me to see it come back up, touch, break through, retouch again, and then continue higher. And so yeah, it's that would be very bullish. And after an enormous day, let's see, it was up 7.38%. The Qs were up 7.38% yesterday. Huge move off of that CPI data. And so yeah, that's kind of the way I'm seeing things for the short term. Again, we are still in a bear market. There are still months ahead of us, several months, somewhere between 9 and 15 months of bearish economic conditions in front of us as the Fed continues to tighten into higher inflation. Now, as of right now, the inflation rate is year over year 7.7%, and the Fed funds rate is at 4%. So there's 3 percentage points there to make up. Now I think the Fed is going to be able to tighten, maybe a couple more times, and the CPI ought to come down to below where the Fed funds rate is. It's going to take time, but that's bearish. That's bearish for the stock market and for the economy. So yeah, even though right now we are getting a bullish snap up, generally speaking, this is just going to be an opportunity to put on shorts at a later point in time. Now, here we have a succession of lower highs right here, going back for about a year now, just a little bit shy of a year. We've got this bear market in play, and this top red line here marks out where the sort of the trend line of resistance is. And so to see price go back up to roughly the 300 range on the Qs wouldn't be, it wouldn't surprise me at all. And actually to see it make a false breakout above that to pull in a whole bunch of traders to the long side and then dive back down below it again actually would be what Wall Street does. So short term, definitely very bullish. And I'm looking for opportunities on the bull side. Otherwise, just kind of sitting tight, looking for opportunities to enter on the long side. Bitcoin is struggling here. I'm getting connection errors on my stream. Okay, we're good now. Yeah, we're good now. Yeah, Bitcoin with this whole what was that, FTX, and people not being able to get into their accounts. I don't really follow it too much. Fortunately, I have a couple of coins that I have on in exchange. Let's see, I mine Helium, and helium goes straight to an exchange, but it's such a small amount of money that I'm really not worried about it. And I think I have something else on an exchange. I can't remember what it is. But the rest of Ravencoin essentially is what I mine other than helium, and that goes into a wallet, so I really don't worry about it too much. All right, let's see. What else? The 10-year, 2-year is still inverted. And, actually, I think that until we see this thing start to normalize again, we'll be in a bull market, actually. I think, the markets can rally while the yields are inverted, and it can continue for a long time. I think we'll soon be in month number 6 of this inversion. Let's see. 1, 2, 3, 4, 5. Yeah, so we're coming up to almost mid-November, so we're about 4.5 weeks into this, 4.5 months into this inversion. And if you look back historically, inversions can last a year and a year and a half back here. So it's, there's still plenty of time for the yield curve to be inverted and for the market to turn bullish before yields normalize. And that's where we see the big crash on the market, is under normalizing yields. Once the yields start to normalize, that's when we get the big crash, as you can see here in 2001 and here in 2007. When the yield curve started to normalize, that's when we started to get crashes on the market. Oil, so oil is nor bearish. Oil is neutral. It's neither bullish nor bearish. And so buying and selling, buying low and selling high, or selling high and buying low, is the way to go on that. The VIX, I'd love to see the VIX fall down below 20. That would be wonderful for the bullish case. Time will tell. We're, again, on the VIX, you can see this bottom red trend line right here. And so far, aside from a small period of time, about 2 weeks there during August, the VIX started breaking down below that line, but otherwise it's been a rather reliable point of support, a rather reliable line of support there. I'd love to see it start breaking down really low, going back into the teens. I think it would be temporary. I think that if it did break down into those levels, it would last for a short amount of time, like 4 to 6 weeks. But then this VIX, it's overdue for a move into the 40s and even into the 60s. I think that'll come along. The move in the VIX will come along once this yield curve starts to normalize again. There's that move of the VIX into the 40s and 60s will come along at that point in time. In the meantime, again, things can be bullish while the yield curve, the markets, the stock markets can be bullish while this yield curve is inverted. So let's see, that's Bitcoin. Bitcoin's definitely bearish. My forecast on Bitcoin, you can see here, this is the neckline to a head and shoulders pattern. And by early next year, February of 2023, I wouldn't be surprised to see Bitcoin somewhere around 13,000. And exactly where it bottoms out is anybody's guess. I've heard somewhere around 8,000 before. Who knows? Who knows? It's another 50% down from here, so it's quite a bit further down. Gold. Let's take a look at metals here real quick. What's gold doing today? Oh wow. Yeah, gold is definitely catching a bid. Interesting. I've got this sort of downward trend line in gold that it's breaking back above. That looks like a Wyckoff distribution to me. This to me looks like a rather short-term burst in gold. I imagine, I guess, folks, they see the Fed. Whenever the Fed is tightening, gold takes a hit. Whenever the rising interest rates is not good for gold. And we're still the Fed is still hawkish. Regardless, the Fed has jawboned a little bit of softness, like maybe they won't be raising by 75 basis points at a time. But still a rising environment where interest rates are rising is still bad for gold. nice run. If anybody's traded this, this has definitely been quite an acceleration in the price of gold. I don't trade gold, so I just kind of keep an eye on it, for sakes of trading other things. Yeah, dollar strength is definitely falling away. Interesting. I think this is short lived also. I think that in another 3 to 6 months now, we'll see the dollar right back to where it was, and for that matter, gold right back to where it was too. Yeah, in a short amount of time, I think we'll see gold come back down to its levels previously seen. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at Monday morning's strategy session. Have a great weekend, everyone. I am out.